Buongiorno a tutti.
Buongiorno a tutti.
In un paio di minuti inizieremo.
Buongiorno.
David, ti chiedo cortesemente di spostare i partecipanti nella modalità per cui non... Grazie.
Il tirante mondo dell'ICT si scatena. Grazie.
Luigi, mi vedi?
Prego,
Sì.
prego tutti di spegnere il microfono e la videocamera, grazie.
Mi sento forte e chiaro.
Ok, no noise.
Scusate, ma abbiamo, diciamo, alcuni piccoli problemi da risolvere. Partiamo in un paio di minuti, grazie. Allora, io direi di iniziare. We can start just for Karen in order to communicate in English and to be aligned. Buongiorno a tutti, sono Davide Burani di American Chamber of Commerce in Italy. Molti di voi mi conoscono, vi ringrazio per aver deciso di partecipare a questo webinar della durata alle 17 vi lasceremo liberi. Un webinar che prende spunto da un'idea che abbiamo avuto negli scorsi mesi con Pierluigi Paracchi, qui presente CEO di Genenta Science e coordinatore del nostro Bulling Green Bull. L'idea è quella di presentare alle aziende italiane, non solo, quali sono le opportunità presenti sul mercato dei capitali americano e in particolar modo oggi a livello di listino NASDAQ. E infatti qui presente Mrs. Karen Snow, che è Head of Listing and Revenues di NASDAQ a livello global. Nella prima mezz'ora di questo incontro Pierluigi e Karen dialogheranno per presentare alcune, insomma, per raccontare alcune delle opportunità che ci possono essere sul listino NASDAQ, mentre nella seconda mezz'ora, insieme a Mauro Carobene di Caleira e a Claudio Erba di Docebo, continueremo la conversazione con Pierluigi, moderata da Pierluigi, riguardo sia, diciamo, gli spunti che emergeranno dal dialogo tra Karen e Pierluigi e sulle lezioni apprese da Docebo e Caleira, entrambe aziende quotate negli Stati Uniti, che possono essere condivise con le aziende che stanno guardando ad un'eventuale quotazione e eventualmente sul mercato americano. Dette queste due parole, ringraziando tutti i partecipanti che si sono collegati e che si collegheranno nei prossimi minuti, cedo la parola a Pierluigi per la sua introduzione and then to start the fireside chat with Karen. So, Pierluigi, the stage is yours.
Thank you, David, for the kind introduction, and thank you very much, Karen, to be part of this fireside chat, so we can have a discussion in a very particular period for the financial markets. You know, the volatility, the value is a very crucial and critical period of the year after month and month of trouble on the market. So it will be very, very interesting for me as a CEO of a company listed that is Genenta, but also for Claudio Erba, that is the founder and CEO of Docebo, and Mauro Carobene, that is the Chief Business Officer of Caleira. Me and Claudio are listed on NASDAQ, and Mauro is listed with Kailera on the New York Stock Exchange. Sorry for that, Karen. So not everybody, not everyone is listed on NASDAQ, but it's interesting to have different angle in this discussion. As David said, the idea behind the Bowling Green Bull initiative, this task force inside the American Chambers of Commerce in Italy, is to create a bridge between the Italian company to the US financial markets, but also to support and increase the network, enhance the network for the CEO, for the entrepreneurs behind the company listed on NASDAQ and NYSE, just to increase our visibility, our firepower to the US investor and the US market. So given this introduction, let me go to our Q&A session. I would like, first of all, I think that makes sense if you spend a couple of words to introduce yourself. And if we start with a clear, maybe the simple question, that is, what are the benefits of a US listing and a listing on NASDAQ, and why an Italian company should choose a NASDAQ to go public rather than other non-US market? Please, Karen, introduce yourself and then follow my question.
Well, thank you. It's great to be here. I think, as you mentioned, I run U.S. listings, which includes, anyone who's looking to list in the United States from abroad. So absolutely thrilled to be here with you all today. In terms of, listing on NASDAQ, I'd say, some of the key reasons that companies choose to list in the United States over other foreign exchanges is really that the United States has the broadest access to capital. In addition to that, we support our listings with multi-million-dollar visibility proposals focused on investors, customers, as well as increased brand visibility on day one and then on an ongoing basis. And I think that's quite unique to the United States. And then I'd argue that, on an ongoing basis, the U.S. exchanges, the broker-dealer community and the research community really support, listings quite differently than what you see in foreign markets. In addition to that, I would say that, when you combine all of those things together, that we that should theoretically lead to the highest valuation, or that you would hope that it would. So I'd say that's another key reason that people choose to list in the U.S. and NASDAQ, specifically when you think about growth companies. So it's really that visibility as well as the ongoing support. And so some of the things that we do to support our listed companies is, when a company goes public, we provide IR services as well as ESG services and governance solutions on a daily basis. And really our goal is to make sure that companies listed on NASDAQ are best of breed, have the best transparency, and that investors have a high level of comfort investing in NASDAQ listed companies.
Well, thank you for that. And as you can imagine, one of the big questions for every company and every entrepreneur is to understand what is the right time to go public. Now maybe the window is the IPO window is not easy, it's not open. But in your experience, following what happened in the past, what is the right time for a company to think about going public, especially for a company that is not a US-based company? Karen?
Penso che si sia frizzata, quindi abbiamo... Karen, can you hear from us?
Vedi, perché la window è chiusa, non c'è possibilità di fare pubblici, allora... non abbiamo...
Allora, ovviamente i problemi tecnici ci stavano. You are now totally frozen.
No, io non la sento, non la vedo. Cioè la vedo, frozen ovviamente.
Ovviamente tutto andava bene e poi è arrivato il...
Visto che abbiamo Claudio e Mauro, se apri per loro, così intanto possiamo un po'...
Mauro e Claudio sono disponibili.
Eccoli, allora, non è che vi chiamo
Ecco.
per fare buchi, non è che vi chiamo per fare buchi.
Aspettate che Karen, vediamo se riusciamo. Karen,
Hi.
hello. Can you
Hi,
hear?
sorry about that.
Okay.
Okay, if you want to switch off the camera, maybe it's better.
No, try to, no, yes.
Okay, well,
to keep
let's just see.
Okay, good. So maybe my question was not right, and this is the reason why you are frozen. You stay frozen because I asked you about the IPO window and when is the right time.
There you go. It's closed. I think that said it all, actually.
But back to my question. So I think that for entrepreneurs and for companies, one is very complicated to understand what is the right time to go public. In your experience, for what we have understood in your experience as listed company, what is the right time, especially for not US companies? So when they are commercial, for when you are let me say a startup or a tech company, when you are more mature, NASDAQ is ready to open also for let me say early stage companies. So give us your angle.
Yeah, so first and foremost, I'd say, and you hit on this, that the IPO window needs to be open, and the markets need to be somewhat accommodative. So one of the things that we look at here at NASDAQ is the VIX, which is the volatility index. And what we see is 95% of companies go public when the VIX is below 25, and 90% go public when the VIX is below 20 on a consistent basis. Today, the VIX is trading around 23, 24. It's the lowest that we've seen in some time. So if we start to see that it trades around that level for several weeks, that'll be a big indication to us that the markets are starting to feel a little bit more accommodative. And then I'd say, secondly, the most important thing to do is to be prepared to go public. So I think a lot of times, especially when the markets are going up to the right for a long period of time, companies forget that the window does close. It's not always open. And it typically closes when there's concerns around geopolitical situations. Right now, it's inflation and rising rates to try to fix that situation. We've also been watching the energy crisis in Europe quite closely. So those kind of big market disruptions lead to more market volatility. And when there's market volatility, it's really difficult to take a company public. So, from our perspective, what we really, recommend companies do is stay focused on preparing and being ready to go should the market open. So you also really want to think about what kind of company that you have and where we are in the economic cycle. So when we're in the earlier stages of an economic cycle, when the central banks are very supportive, decreasing rates and increasing their support for the economy, we tend to have more growth-oriented companies going public when rates are lower. And in later cycle, where we see rates typically rise, we tend to see later cycle companies. So ones that have, cash flow and, perhaps even pay a dividend. So I think it's important to understand what kind of company you have and, run your business the way that you should be running your business, and look to access the public markets when you can really garner the largest valuation.
Thank you for that. And it's the first time that I really understand that there is a sort of switch on, switch off for the window, for the IPO window that is called VIX. So the volatility index is a good example of when is the right time to go public or not. That's great, and it's something that we look at it to understand if the window will open again. Okay, back to the process. So we went public as Genenta last December. And to be honest, the SEC requirement, the NASDAQ requirements are very high, and we have worked a lot to prepare our F1 to go public. What are the key requirements for a non-US company to be listed on your market?
Yeah, so I would say in its simplest form and not to overwhelm, the SEC regulates the markets and the companies that go public. The exchanges are what we call self-regulatory organizations. So we have our own requirements, and those requirements are set by us and approved by the SEC. So the first thing that you would want to do is a lot of preparation, and I'll talk about that in a moment. But as you're getting ready to go public, what you do is you file a registration statement with the SEC. They review it. They often have a lot of questions. And once all those questions are answered and they have a high degree of comfort, they will declare it effective. And after that, you're able to access the public markets. Simultaneously, you would want to file a listing application with the exchanges. Or an exchange, and with that, we'll review the requirements. I would say our listing requirements are not as arduous as New York's listing requirements, and also we're not as stringent as sort of an SEC review, but we do a lot of we do ask a lot of questions and do want to make sure that you're meeting minimum requirements. When you file your registration statement, that'll also include your full prospectus, which will have a description of your business operations, the financial conditions, the results of your operations, risk factors. It'll describe compensation and other incentives for management. It'll also have profiles of the board and the management team. It'll also include audited financial statements, which is typically a big component and lift to going public, and takes considerable time to get those financial statements together. But the prospectus and the filing is usually prepared by the company, but also with the support of your underwriters counsel, your own counsel, as well as your auditors. So there's a big team that surrounds you when you're going public. Some other things that you want to start thinking about, though, I would say, you will be required to have independent directors. That's usually a minimum of 2, and I would say on average, it's at least 3 when a company goes public. You're going to want to start thinking about your corporate governance framework, and including your corporate bylaws, registration right agreements, stockholder agreements, as well as corporate governance policies. So your code of conduct and ethics, insider trading policies, disclosure controls, whistleblower hotlines. You may want to start thinking about how your board is going to communicate and engage with a secure board portal. We have something called Board Vantage, but one of the benefits of that is, in the case that you were to incur a cyber attack, or if you had some form of litigation, anything that's communicated on a secure environment outside of your corporate wall is not discoverable, and of course would be safe in the case of a cyber attack. Some other things to consider are internal controls, your corporate compliance program.
Ecco, siamo ricascati, siamo ricascati di nuovo nel...
E posso aggiungere io che poi commenteremo anche con Claudio e Mauro. Karen, are you there? Karen?
Yeah, I'm here. Should I take myself off the camera?
Okay, maybe. Okay. Try.
Should I take myself? I don't know when you lost me, actually.
No, okay, it's fine. I mean, I think that we have understood the complexity, or the process, and just around the requirements. I remember that along my experience, something that really was new about the process was the minimum number of new shareholders that is needed to go public. In my case, was 300 new shareholders at the time of the IPO. This is I think that's important requirement for the...
Chiedo a tutti i partecipanti di mettere in switch off la camera, grazie.
the liquidity, no? Is correct to say that you want to have, let me say, to maintain the liquidity of the stock, a minimum number of new shareholders at the time of the IPO. This is maybe something that is different from a lot of growth market that we have in Europe.
Yeah, I think you need to consider that depending on which exchange you're on. At NASDAQ, we have 3 different exchanges. So, some require 300 round lot shareholders, some require 400 round lot shareholders. So yes, it is something to consider, but what I would say is, most companies going public who are of size have nothing really to be concerned about. And I would say, anyone who's looking at a market cap of 500 and over won't really have a problem meeting those requirements. And that's really why you rely on the underwriters to make sure that the shares are placed in a way that, you'll meet those requirements and it'll create enough liquidity and the stock will trade well once you go public.
Oh, great. And back to your experience, what are the most important challenges for a non-US company in terms of, let me say, the first 2 or 3 big things that is necessary to be prepared to face if you want to go public in the US as a non-US company?
Yeah, so I would say the most important things to be prepared for are that you're running your company in a much more open way, that you have to be transparent, that investors expect to have access to you when they have questions, and you really, going back to some of the policies and controls that I mentioned earlier, you want to have a lot of built out protocols around that. Who's allowed to speak to the press? When they speak to the press, what are they allowed to say? There's big issues about disclosing things that shouldn't be disclosed, confidential information, but also perhaps speaking about forward-looking statements in a way that has been approved. So there's a lot of training, I would say, that needs to go into running a public company in a way that you want to make sure that you're not bumping up against any regulatory issues. And then I would say, the governance around running a public company is much higher than it is for a private company. So you want to make sure that you've laid all the groundwork there, and especially the CEO, the board, and everyone in the management, C-suite understands what can and cannot be said, what can and cannot be disclosed. There's just a lot of rules around that. And then the other thing that I always recommend, where I really see companies stumble, is over-promising and under-delivering. I think you're much better served doing the opposite. Investors want to win. They don't want to get blown up in your stock if you have a misstep. So, the preferred route really is to make sure that you're setting them up for success and they'll set you up for success as a result. They have to have a high degree of confidence that you know how to manage the street and that you're not getting out ahead of yourself.
Karen, the message is crystal clear. So we mentioned at the beginning about the volatility of this period of the market. Any idea, any advice about how a company listed can handle the volatility of this day in the market?
Yeah, well, so one, I would say, I always say control the controllables. If the volatility has nothing to do with your stock specifically, focus on running your business, putting up your numbers and doing what you need to do from, the perspective of blocking and tackling. If it doesn't have some, if it's more related to your own business and a misstep, perhaps, what I would say is really getting out there and communicating to investors, making some of the hard decisions that you need to make to turn things around, and to recognize that it's a marathon, not a sprint. one of the things that we say here at NASDAQ is sort of your IPO is your coming out party or your wedding, and you're marrying in the stock market. And from there, it's about the ongoing relationship that you have with your investors and all your stakeholders, and it's all in a very public way. So I think it's really important to lead with authenticity and to build trust in your investor base and all your stakeholders. So no one expects companies to never make a mistake or miss a number, but it's how you respond to those situations, I think, that are really what makes great companies great.
No, and as you mentioned, it's a long journey, and also to create credibility and the reliability on the market, on the investors, is a key aspect of this process. And when should a company start to dialogue with NASDAQ, and what kind of support you can provide to a company that are thinking to go public on NASDAQ?
Yeah, so ideally we would like to meet with companies 2 years ahead of going public.
Wow. 2 years.
Our role is really to help companies prepare to be public, and to provide governance support and advice. We do things like board assessments. We help people find independent board members, and I mentioned our secure board portal. We also have electronic DOQs, so that can be helpful and save time and money in terms of preparing to go public. And then we also offer these IPO packages once a company goes public. So, depending on what level or tier you choose to list on, you can receive a 3-year complimentary package, which includes our IR, so investor relations services, ESG related services, as well as governance, advisory, and SaaS-based solutions packages. So we've really constructed NASDAQ in a way that is, where we really want to support companies throughout their life cycle, not just when they go public or over the course of the next 3 years, but really over the lifetime of your company. So we support our companies, through these services, but also, around visibility and on an ongoing basis, with the regulatory environment in DC, and making sure that we're representing our issuers in all sorts of situations.
Okay. Thank you, Carol. My last question, then we can start to discuss also with Mauro and Claudia about their experience to go public and to stay public in this market. So 2020 and 2021 was a great years in terms of numbers of IPO. 2022 was really tough. Do you have any view about the next year? Or do you think that something is going to change? What is your view and the NASDAQ view on the market for the next year?
Yeah, so my crystal ball says, you're exactly right. It was an incredible year in 21. It was a record-breaking year, quite frankly. And this year actually is going on the books as a record-breaking year the other way. That said, I mean, we've had over 150 IPOs at NASDAQ. They may not be the large brand name ones that you would know, but we've had TPG, Mobileye, which have been sizable. And I would also highlight the Porsche IPO, which I'm sure everybody here was focused on. Both Mobileye and Porsche, quite successful, large, and I think that's important in terms of where we are, and it's proof that good companies can always get out. And as we look forward to Q1 of 23, we've got some fantastic companies teed up, on par with the Porsches and the Mobileye's of the world. It's a matter of whether the markets are accommodative or not, and whether they choose to go at that point in time. But we've got a significant backlog. And what I would say is, I mentioned the VIX before, that's starting to settle in. I'm not going to say that we're through, we're not going to see additional market drawdowns. But it is starting to feel with the inflation numbers in the US starting to come down a little bit. What we're really looking for is, the central bank to really take its foot off the accelerator. They've signaled that they're going to start doing that, but they really want to see, inflation, really start to come down.
The geopolitics.
Once we see that, what I would say is I think when you look globally, the US is probably one of the best places to be investing. And we all need to be investing for our retirements in the future. So I'm optimistic that we'll see things come back. They may not be, be rip-roaring. It'll be a little bit more of a leg in over time, but there's certainly a lot of fantastic companies looking to access the markets.
Yeah, thank you for that, and please stay with us. So I see Claudio and Mauro. So Claudio, you did great. I remember that you went public before in Canada, then you moved to NASDAQ, so you have a lot of experience in IPOs. And I'm happy to say that you are a 1 billion company listed on NASDAQ. What about your experience? And have you ever seen the VIX, the volatility index, as one of the parameters for your IPOs?
Well, actually, the first advice I'm gonna give is do not look every day at the stock price or the VIX or whatever. I mean, guys, we are entrepreneur and we are here to run a business, probably a high growth and profitable business, and this will be reflected in the stock price during the marathon. I mean, and also, I mean, an entrepreneur should not do what the market want him to do, but he has to do what is good for the very long time. And what I check all the boxes on what Karen is saying, because I mean there is a lot of complexity of being public, but it's an incredible learning journey. And I mean, it's like I'm making, Karen, an Italian parallel, so probably you're not gonna understand it, but it's like playing in Series A, okay? You play with the big guys and you network with the big guys, and many of the entities you work with, the NASDAQ itself, the underwriters, all the investment banker you usually speak with, the lawyers or other consultants will teach the company a lot. And for sure, that depends also on how long you will stay public. Your company will be reshaped for the better, because you are dealing with such a level of complexity that you need to evolve. You cannot pretend to be the same company before the IPO. And this is great, and this is beneficial for the company, of course, because C-level or executives, or they evolve or they have to change. So for me, it was more than everything what I love about being a public company guy, the learning journey. And I'm not learning because my company does online learning software, but it's the learning journey itself, which was incredibly rewarding.
That's great, and I think that I'm moving in the right direction. So in the first weeks after the IPO, my IPO on NASDAQ, I used to watch the Bloomberg screen for the price, to check the price 400, 500 times per day. Now I'm down to 150.
It's not social media.
Somehow. Anyway, Mauro, what about your experience? I mean, also Kailera, you went public through a SPAC when SPAC was in a better situation than right now. So maybe after that we can ask a comment to Karen about SPAC. What was your experience for the combination and your experience as a listed company on New York Stock Exchange?
Yeah, okay, so thank you very much. First of all, I'm very happy that I listened the first 30 minutes of Karen's speech, because she summarized more or less all the important points. And We did some mistakes. She mentioned what not to do, overpromise and under-delivering, and of course we ended up a couple of times in exactly in that situation, and we burn our fingers. But even more important, she shared some of what you get from being listed in US or in New York Stock Exchange. And from my point of view, we experienced exactly the three things that she said. So first of all, it's access to capital. And 1 year ago, we made a big acquisition of an American company, mainly with capital that we raised just because we were listed. So we could have not dream about collecting this money without being listed in New York Stock Exchange. The second point that she mentioned was about the brand awareness or brand visibility. And we announced recently a deal with Amazon, with Oracle. So all those kind of deals, again, happen only because, let's say, being an Italian company, it's very difficult to make such a kind of such a big deal, and we got just credibility because we were listed. So once you go and I'm running the business, so from my side, I'm spending most of my time in customer meeting and so on. And once you go there and you present yourself, introduce yourself, saying we are listed in New York Stock Exchange, somehow you immediately rise the bar. So immediately they know that you satisfy certain requirements. That let's say, it's complex to be listed. There are a lot of costs. There are a lot of process. There are a lot of stuff. But at the same time, you can use all of these as something that give you credibility. So from my point of view, that was really important. The community as well, it's very important, even if maybe it was a little bit less relevant. So overall, the experience was, let's say, it was a long journey. It's a marathon. Definitely there was a lot of learning. But from my point of view, the two things that I appreciate more is definitely the capital, so the ability to raise capital, and the visibility, so the brand awareness.
Mauro, give us some color around the experience as to going public through a SPAC. Was a happy choice because in Europe, I don't remember exactly the year, but after
2019, that was 2019 when we did it.
Was your experience with SPAC? Was it the right let me say, way to go public?
Okay, difficult to answer in an open format and so on. And now I think that the market decided in the last, let's say, couple of years that going public with a SPAC most probably is not the best choice. Definitely, we paid and we are still paying the fact that we went public as a SPAC. In that moment, from my point of view, was the right choice because it clearly gave us the possibility to speed up all the process. That's the benefit of in 2019. Now, difficult to, clearly we cannot go back and change our mind and so on. But that's maybe going back 2 years or 3 years. Karen, before she mentioned, you should connect with us 2 years ahead of going public. Now, for us, the process was a little bit longer than, let's say, something between 6 and 12 months. So definitely something shorter. That was definitely a benefit. On the contrary, clearly, during the last 12 or 24 months, clearly, whoever went public with a combination with the SPAC got somehow punished by the market. And then it's up to us to prove with the real economy, with the result, showing profitability and so on, to show that that was the right decision. I would say that it will be up to the market in the future to tell us if that was the right choice or not. Yeah, happy.
During 2021, before our IPO, we evaluate SPACs as an option, especially because in that period there was a hype around SPACs. Somehow, in my experience, since not everything is under your control, somehow the IPO process is something that you can control a little better than the SPAC process that is more owned by the promoter of the SPAC. I don't know the future of the SPAC, so I don't know if you, Karen, give us your view about the future of the SPAC, if you think that this will remain, let me say, a way to go public, or that will be reduced as an option.
Yeah, so First of all, I would say that most IPOs, traditional IPOs, have not traded particularly well. So I think when you compare, the SPAC market versus the IPO market, neither one is traded particularly well. And I would say that's because of what I highlighted earlier. We went through this situation where you had the wind at your back. We were in a situation where the central banks were very accommodative, and we were looking for growth stocks. All investors wanted growth. When that started to turn and rates started to rise, that impacted valuations for growth stocks pretty dramatically. So whether you went public via a SPAC or you went public via an IPO, your stock is likely down. So, in terms of the SPAC product itself, I would say that we're believers in it. There are a lot out there searching for deals right now. I think the challenge is that the market's turned, whether it's for IPOs or for business combinations. What the market really wants right now are companies that are closer to profitability, that have cash flow or a path to cash flow. So that if we're entering this, recessionary environment, they're buying a company that can weather the storm. So I don't think of it as much as around whether the SPAC is the right way or the wrong way, or traditional IPO is the right way or the wrong way. I think it 100% has to do with the kind of company that you have. And if you have a growth company, which is what most companies looking to go public are, it's a more challenging environment right now. And I think what we're going to see, quite frankly, in 23 are, private equity companies that are backed by private equity, which are more traditional cash flow generating kind of companies. And we're going to see a lot of spin outs of well-developed companies, from already publicly traded companies that may need capital to grow their businesses to the next level. But you can see that path to profitability.
Okay, great. And back to Claudio, your experience about all these requirements. I mean, what you suffer the most? The financial parts, the fact that you are not allowed to speak around the world, to say whatever you want to say. For example, as Elon Musk used to do. No, he's not very focused on the SEC requirements about the investor relations. So, but anyway, in your experience, was more the financial, the compliance. What you suffered the most? What was a surprise in your experience? Because for me, just to add, my view was really a surprise for me, the quantity of work that was necessary for us as an Italian company to get the requirements of the US GAAP. I thought that was easier than as it was, but at the end of the story, it was necessary for us to have on board a US CFO to solve the US GAAP issue. But please let me your experience.
So first of all, if you want to play in Series A, you need to have a certain degree of discipline. So, if you go on the NASDAQ pretending to be the guy that can say whatever he think about his own mind, you are playing against your investor. Because it's easy to say the wrong thing, and it's way more easy when you are a European thinking you are not saying something wrong. But the other side of the ocean can sound very bad. So either a joke can become a liability. But I think that working in such a disciplined environment makes the entrepreneur and the company strong. If I have to give an advice to every other Italian that want to go on the NASDAQ and be listed in US compared to be listed somewhere else, will increase at least the multiple and your opportunity to create serious wealth for your investors, actual and future investors, is train yourself, train your company, train your executive on all the nuances that are out there. Be prepared to pay millions and the end of liabilities. be prepared to hire the best law firm out of New York. Don't pretend to do it with the Italian law firm or whatever. Like you said, Pierluigi, hire an experienced CFO that had experience in the market. Don't pretend to do it with your Italian or French or cousin that was doing the CFO in the bakery down the road. This is not the way to do it. And there are a lot of other details. I mean, blackout period. For me, blackout before the IPO was not having the light in my house. And, you know, and there are tons of these details. You need to be educated. Another thing that people need to learn, be listed in the stock exchange is not you have an ATM and you can sell stock when you want. You are sending loud messages to the market. Same, there are moments where it's appropriate to raise money, but when you raise money, you dilute your actual shareholder. So you need to have a story on why you are doing this, like Calera did. So it's an incredible, complex and sophisticated journey. And I mean, but the reward is high. When the reward is high, the risk is higher. And also the reputational risk. Guys, before going public, close your ego in the closet. Ego is gone. Be careful. Every single word you say can be beautiful or very bad.
Interesting, and I really hope that Elon Musk is part of our discussion today, so he can good advice from what you said and what you did. Anyway, before Mauro, we have a chat. If you have some specific question for Karen, for me, or for Claudio and Mauro, please add to the chat your question. So Mauro, in your experience, what is the requirements? Not the same question. I mean, what you suffered the most? What was a surprise, and how you can you are handling day by day the requirements to stay public in this market?
Yeah, okay. I think that interesting is I tend to agree with what Claudia said. So at the end is there is a complexity in terms of internal process coming from an Italian company that maybe was small company and so on, so not well organized, not well structured. It's very difficult to rethink all the process and everything to comply with all the requirements. So from my point of view, I agree about playing in Serie A, you need to have professional players. So there are some key roles where you need to rely on people that have the right experience. Otherwise, it's very easy to make big mistakes. And I think that one topic that definitely we underestimated is the overall cost of the overall setup. So hiring a CFO, you experience it. Hiring a CFO in US is super expensive. Hiring the best law firm in New York is super expensive. So whenever you consider to go public in US, I strongly suggest really not to try to assume that you can do with a small budget and so on, but ask to listed company how much they are spending, and assume that you will spend more, because in the beginning you lack experience. So it's not just taking the average cost for another listed company and assuming you can do with the same, but you will do once, twice, because you need to hire people, then you don't fit. There is a cultural change or difference and so on. We had another, from my point of view, things that we underestimated, which is, and Claudio mentioned it as well, about RSU. So RSU is a very important tool because typically when you think about going public, you always think about the market, raising money and so on, but it's also a big opportunity to make your employee wealthy. So at the end, you can reward a loyal employee and so on with RSU. But all of this works in a moment in which the stock price goes up. Once, for a number of reasons, and Karen mentioned before, now it's all the share lost value and so on, then you end up in having employees that are really unhappy because they're paying a lot of taxes and they don't see the possibility to monetize those, and maybe they cannot even sell because there are things that are happening. So you have a closed window and so on. So that's a tool that can be super efficient in certain cases, but can be really dangerous as well. So can get exactly the opposite effect. So that definitely that was one of the learning of 12 months of share, let's say, going down that we were not expecting. Yeah, those more or less are the learning. Yes.
Mauro, it's very clear, and I think that a company needs to be prepared not only for one attempt. You know, in our experience, we tried to test the waters in May of the last year. The market was not great, so we not cover all the book, and we prepare ourselves in December. And at that time, the demand was strong. We find the right way, the right message, and was possible to go public. So for someone, it's just another attempt in terms of organization, in terms of financial part, requirements, and everything. You have an extension of the cost. You need lawyers for our hours, and you need to be prepared, as you said, to have cash on your hands if you want to manage this process. So we have 8 minutes now. So
Luigi, I think that we have a question on the chat. I think for Karen, and I think that we can close our webinar with this with this question. The question is the following: what are the key points of attention when going public through a SPAC, as you discussed before?
Yeah. So what I would say is really important is to find a SPAC sponsor that you feel like you're aligned with and can really add value to the equation, whether that be making sure that they can backstop the transaction. I would say that's probably one of the most important things right now. The pipe market is dried up, so you need to make sure if they're, if you've reached a negotiation and a final valuation for your deal, that they can actually step up and pay that if shareholders redeem. And then I would say, going back to what I said earlier, don't overpromise and underdeliver. And I think that tends to be or can be an issue with a SPAC combination, because you're negotiating with one party at that time. But on the back end, you have to bring that transaction to the public markets. And if the investors feel like that deal is too rich, they're not going to be there to fill that gap. So you want to be really reasonable about your expectations in this environment. And I think, you do have the benefit of, reaching out to investors through that process and, bringing them over a wall in a way that you can't do in the IPO, so that they can understand the real benefits of the transaction. But you do absolutely have to remember, on the back end, you are a public company. You need all of the things lined up from a governance perspective day one, and you need to, be managing the street. So, having that IR role, having a great CFO in place, having internal controls, you really have to be prepared to run a public company. And, going on Mario's point earlier, I do think that going public in the United States does lend an element of credibility to your story. And to Claudio's point, you're playing with the big boys and girls, and you need to be prepared for that.
All right, thank you for that. And as Davide said, I think that we can make the last round table in the last 3-4 minutes. If there are no other questions, then we can say goodbye to everyone, and hope to see, let me say, more Italian company listed on the US markets in the future, since we have strong high-tech companies, but not only high-tech companies, as we show here today. Any closing remarks from you, Claudio, in your experience? You really provide a lot of good advice. The last thing off the records, let me say, what you really is your gut feeling of this experience? What you can show to share with our audience?
No, first of all, I think that Karen is spot on in everything. I mean, there is no need to repeat what she was saying, but when she say we get in touch with companies 2 years in advance, that doesn't mean that you spend a dinner with NASDAQ 2 years in advance. Means that you are doing your bench, you're building your muscle to be prepared to get listed, because the last thing you want to do is getting listed without being preparing in everything from internal audit to mimic the quarter earnings 1 year in advance and stuff like that. You need a couple of years of struggle and exercise to be ready and go public confident that all the processes are in place. And be sure that you will be never ready, because you will learn in the meantime, quarter over quarter, how to improve yourself, the way you communicate with the street, additional process, additional board members that can become very useful for you, and be part of the NASDAQ. I mean, not only the NASDAQ can support you finding board members, but all the bankers that rotate around the NASDAQ galaxy are, for us, have been extremely valuable to found people to fulfill new position in our board, also from the diversity perspective. Diversity is an important element, not only because ESG, but because it's the right thing to do. Because if you have people coming from different background and ethnicity, etc., they provide a different lens to look at the reality you are looking with the Mediterranean Italian eyes. So it's incredible how those people, those entities rotating around the NASDAQ ecosystem can be valuable for you. Spend time with with people, drinking coffee with bankers, with NASDAQ, because it's, for me, it's incredibly valuable.
Good, good. And Mauro, we have just one minute. So, are you going to the gym?
Of course, yes, I will. always. I'm a runner. I run marathon, so that's exactly the experience on being listed as well. So it's a long journey. And just one piece of advice: spend time choosing the right board members, and the cooperation with the board is so important. It's not just a team that stay there, but it's all about being supported and define and sharing the strategy and so on. So that's from my point of view, it's something also in other company that were listed. I used to work before. It's super important. So successful company needs to have a proper cooperation between the board and management. That's so spend time choosing the right one.
Okay, good. And just a few seconds. I mean, first of all, as a Bowling Green Bull initiative, we want to organize in the tower of NASDAQ an event one day. So all the Italian companies or entrepreneurs that are Italian can come to NASDAQ just to make the Bowling Green Bull.
We would love that, and welcome you all. So we're thrilled to have you, and please reach out to me if you have any questions. In the meantime, we're happy to help in any way.
Okay, thank you for that. And I think that is important for all the companies, all the entrepreneurs that are part of our initiative to have a direct link with the NASDAQ and all the US market to do the right step to move in this direction. Thank you all. Thank you, Claudio. Thank you, Mauro. And thank you, Claudio.
Thank you.
Thank you very much.
Grazie a tutti e buon proseguimento di giornata. Grazie Pierluigi. Grazie a tutti, arrivederci.
Grazie, ciao.
Grazie.